Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Give me just a moment. I may need to make an adjustment on YouTube. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And by the way, yesterday I spoke in more detail about my planning process and exactly what I'm doing and why. So if you want more background information, again, I spoke about that yesterday, and the recording is available in the Bookmap YouTube channel. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, for entries and exits. And when I talk about setups, I will be talking about a setup in an underlying asset. And the setups can be taken with options, shares of stock for a stock, or futures. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord and the chat in YouTube for your questions and comments. And by the way, there was a comment yesterday in YouTube about my volume in YouTube. I've checked that. I've done everything I can. My microphone is right up in front of my face. The Windows setting, I have the microphone gain set at 100%, as well as the same 100% max setting in OBS, which I use to stream to YouTube. All right, so if you do have a problem with volume in YouTube, please feel free to join us in Discord. Bookmap Discord is free to everyone, whether you have a Bookmap subscription or not. All right, so I'm getting confirmation from Richie, James, DM Vancouver, all volume, all good. And hello, Karma FX. Glad you're here. Great to see you. Great to see everyone. And thank you very much for your kind words, Karma FX. All right, so again, looking for your questions and comments. I'll be glad to try and answer your questions. My agenda for today: first of all, I want to go over news items, economic data, events, and earnings. Then I'll go through my positional analysis. And then I'll review a few setups from this morning. And then I'll talk about the live market. And also there's a question about the Vanna model yesterday, and I want to talk about that in a little bit more detail, just to go over, make sure everybody understands what I was talking about yesterday. And also when we get to the live market, I'll be glad to take a look at any stocks that anyone wants me to take a look at. All right, let's get started. So first of all, news items for today. The PPI data came out, CPI yesterday. PPI data came out today. It was lower than expected, like the CPI yesterday, although there was a much more muted response to PPI today. and at least in the morning. And then tomorrow, consumer sentiment comes out at 10 a.m. and I believe bank earnings, some large bank earnings come out at Karma FX. Thank you so much for your kind words. All right, so that's news for today. Now let's start with my positional analysis. So I'm going to start with a Bookmap chart. And before I take a closer look at this chart, so this is ES Futures in Bookmap. Before I take a closer look at it, I want to take a look at a Thinkorswim chart just to get a bigger picture view. This is SPX in a 30-day 1-hour chart, and showing now SPX trading right around and above the 4,500 level. All right, let me point out some levels on this chart. First of all, the lower and upper weekly expected move, shown with the dashed purple lines. That just comes from an options chain, and I do that on the weekend for the upcoming week. So I look at Friday expiration for the upcoming week. All right, so SPX is trading above that upper weekly expected move. Then the dashed blue lines are showing the lower and upper daily expected move. SPX also trading above the upper daily expected move. Let me point out some Spotgamma levels on this chart. First of all, the put wall at 4,200. That's the strike with the largest net negative gamma that can be expected to act as support, and that is not in play anytime soon. The next level up is the volatility trigger at 44.15. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to subdue volatility. On the other hand, like SPX is trading now in a positive gamma environment, above that level, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility. So in a positive gamma environment, I'm generally looking for more range day, lower trading range, lower volatility than in a negative gamma environment. So again, SPX trading well above that volatility trigger 44.15 level. All right, the next level up is 4,500, and that is the absolute gamma strike, and that absolute gamma strike is the strike with the largest absolute gamma, and that did move up from yesterday, from 4,400 yesterday to 4,500 today. So that is bullish, and that is also the call wall, the strike with the largest net positive gamma. That can be expected to act as support, and for the S&P 500, it should be support. Spotgamma was talking about that being the upper end of the range into the July expiration next week, next Friday. Not this week, but next week. All right, so those are the levels and also the expected move for the day and for the week. And for SPX, again, the volatility trigger did shift higher from 43.95 to 44.15, and the absolute gamma strike shifted higher from 4,400 to 4,500. That alone is bullish, but at least according to Spotgamma, the SPX is near or at or near the upper end of the range, at least into July expiration, unless that call wall moves higher. All right, let's take a look at another chart now just to see a closer look at the levels that are in play for today. So this is SPX in a 1-day, 1-minute chart, just showing the levels that are in play for today. So here is the 4,500 call wall, and then this 44.99 combo L1. So that's an important combo level, combining SPX and SPY in gamma into one level at, again, SPX 44.99. And note this 44.99 level did act as resistance earlier today, support, and now SPX is trading above that combo level, the call wall level, and the upper daily expected move. So SPX traded in a pretty narrow range this morning, really chopped around for quite a while, and it looks like around the European close. Then it broke above, for the last time, above the upper daily expected move, and is now above all the levels on the chart. All right, let's take a look at Bookmap now. So here's this chop zone. This morning up till around the European close, chopping between SPY 448, this is what I have it showing on my cloud notes, and this upper end of the range now, SPX above that. And Floyd's Garage asks, so I assume meaning SPX are above 4,500, so becomes support now. Not necessarily. I think Spotgamma statistics show that price will trade lower after testing the call wall. All right, so those are the levels that are in play for today. For SPY, there were quite a few shifts higher in levels. First of all, the volatility trigger did shift pretty significantly higher from 440 to 446. Put wall shifted higher from 420 to 425, and then most significantly, the call wall shifted higher from 445 to 450. So the SPX call wall is the first kind of upper end of the range. If you look at let me just we'll scroll up on the chart just a little bit, clean this up, scroll up a little bit more. So here is the SPY call wall, the new call wall. So that could be potentially the final upper end of the range, and really what Spotgamma was looking for was a range 4,500 to 4,515, which is right around the SPY call wall. So from this point of view, there is a kind of an upper range from the SPX call wall to the SPY call wall at 450. All right, we'll take a look at setups in a few minutes. So again, for SPX, shifts higher in volatility trigger in absolute gamma strike. For SPY, shifts higher in volatility trigger put wall, and most significantly the call wall. So that's bullish. Looking at that information, that is bullish. All right, let's take a look at Nasdaq now. Nasdaq a little bit more bullish today, and we can just see that in the this is the market watch heat map. We'll just take a look at Nasdaq 100, and you can see the large cap tech stocks: Microsoft, Apple, Nvidia, Google, Meta, Amazon, Tesla, all pretty green today, driving Nasdaq higher. All right, so the levels in play. Let's take a look at a QQQ chart first. So for QQQ, it is trading above the call wall, and that's the new call wall that shifted up from 370 yesterday to 375 today. And QQQ gapped up above that level. Other QQQ levels have been in play for today. In the morning chop, the 377 level did act as resistance and then acted as support. A little bit of resistance at 378, and now QQQ is trading above that level. And QQQ also trading above its volatility trigger that shifted higher from yesterday to 366 to 372 today. So bullish shifts higher for the volatility trigger and call wall for QQQ. And note the upper daily expected move for NQ acted as support. Also VWAP here, that light blue line. All right, so those are the levels that are in play for Nasdaq. Here's the QQQ 377 level that acted as resistance, then support. 378 level, resistance, and now Nasdaq is trading above that level. We'll take a look at setups in a few minutes. So I've talked about shifts in levels, and for NDX, the volatility trigger, put wall, and call wall all actually the volatility trigger and put wall shifted higher, and yesterday the levels for NDX were a little bit odd, so they kind of synchronized back call wall and absolute gamma strike for NDX back at 15,200. All right, so those are the levels, the shifts in levels, all bullish, or mostly bullish. All right, let's take a look at some additional information. First of all, gamma notional. This is market maker's position on the gamma curve. I like to look at this every day to understand how market makers are positioned. And I talked about this in a little bit more detail, but I want to understand how market makers may may react with changes in price and implied volatility. So all these numbers are negative. I'm looking at gamma notional for SPX, SPY, NDX, and QQQ. And these numbers all shifted. Actually, they did not. For SPX, NDX, and QQQ shifted higher, and for SPY actually shifted a little bit lower, but still all positive. So market maker's position on the gamma curve for all these index products is positive, indicating they have to trade against price to hedge their delta exposure. That tends to subdue volatility and lead to more of a range day, trading range day. All right, let's take a look at Vanna model. Now, when I'm doing my preparation, this is pretty much what I look at. I'm looking at the Vanna model to illustrate to my audience here, give a visual representation of what this means. So this is SPX, and this is the Vanna model for SPX. This chart is showing market makers delta notional on the vertical axis and how that changes with price on the horizontal axis. There are two curves on this chart. The first, the gray curve, is showing how market makers delta notional changes with changes in price only. And this is showing as price increases, market makers will have to sell futures. Their delta notional is increasing. They want to remain delta neutral, so they have to sell futures to hedge their delta exposure. And that is typical of a positive gamma environment. That's what I mean by a positive gamma environment. And then the purple curve adds implied volatility to the equation. That's showing how market makers delta notional changes with changes in price and applied volatility. And that change in delta with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. On the other hand, as price decreases, market makers will have significantly more delta to hedge, as predicted by the price only curve, the gray curve. So this is showing, this is typical of a negative gamma environment, that market makers have to sell futures to hedge their delta exposure as price decreases. So there was a question about the Vanna model yesterday. I think it might have been from Yoga Matt asking, saying that it looks the same every day, and that's generally true. For SPX, market makers' position on the gamma curve has been mostly positive since about April 1st, and this is a typical curve of a positive gamma environment. And my example yesterday was looking at the CPI report. So this is yesterday, screenshot for SPX from yesterday. So the CPI report was very, very good, much less than expected across the board. And after the initial pop higher, the S&P 500 traded in a pretty narrow range. And this is typical of a positive gamma environment. There was really no Vanna tailwind. So if you recall from last year, the SPX gamma notional was negative, SPY gamma notional negative for most of the year. And when CPI reports came out less than expected, there were huge rallies. So this is looking at last year. Let's say SPY SPX was on this portion of the gamma curve in this negative gamma environment. If price increases and implied volatility decreases, market makers can buy back short futures, and that tends to enhance or increase volatility. And another way of looking at that, last year, typical expected moves for the day of a CPI report was plus or minus 70 or 80 points. Yesterday, SPX expected move was 32, plus or minus 32, 33 points, something like that. So really half or maybe even less of the expected move from last year for a CPI report. So in this case, looking for a more subdued response to the CPI report, and that's based on market makers' position on the gamma curve. And let me bring that chart up again. So the way to use that in your trading is giving you more confidence to fade this high move. It may be hard to see. So to fade the upper end of the range and then fade the lower end of the range. So sell at the high end, buy at the low end. All right, so that's why I look at this. That is why I look at it. So let's just see where SPX is trading now. Give me just a moment. Bring up my watch list. So SPX is trading right around 4,500. So somewhere between these two lines. So what this is showing is if price continues to increase, market makers will have to sell futures to hedge their delta exposure. So, I'm using this to give me a better idea of how market makers may react to changes in price and implied volatility. If SPX was trading here, I would look for market makers to aggressively buy back short futures as price increases. But with SPX trading here, I'm looking for market makers to sell futures as price increases. So here on the negative portion of the gamma curve, they're increasing or enhancing volatility, and then on the positive portion of the gamma curve, they are subduing volatility. All right, let me take a look at questions. So John 412 says, hello Doug, love your work. Thank you for your kind words. This morning the call wall and hedge walls were higher on the QQQ, and put wall marked a bit lower from 360 to 330. How do you read that? I read more importance in the shift higher in the call wall. That level is more in play. It's closer to current price. So I read that as bullish. All right, so that is the Vanna model. That's why I look at it. That's the information that it can provide. So I hope that clarifies that for anyone who had questions. We'll just take a quick glance at the Vanna model for SPY and QQQ. And for SPY and QQQ, they're less positive. So this is, there's a little bit of a shift in the Vanna model for QQQ and SPY. All right, let's take a look at some setups. So, well, let me get to my thesis first. So the thesis for the day, I think obviously with the positive gamma for all indices, I was looking for a lower volatility day. And for my directional bias was bullish for the S&P 500 and Nasdaq based on the shifts higher in levels. Traders were looking for higher prices and positioning themselves in the options market for higher prices. So they were expecting higher prices. All right, so let's take a look at setups now. I'm going to start with the S&P 500. And let me zoom back out. So this is the hero signal for the S&P 500. What this chart is showing is price for SPX. That's the white line, and the purple line is showing options trades and market maker hedging flow, hedging activity for a combined signal for SPX, SPY, XSP, and ES futures, all into one combined signal. And Spotgamma does provide separate signals for all of those instruments as well. This is the combined signal, and this is generally what I look at when I'm trading the S&P 500. All right, let's take a closer look at this chart. So first of all, from the open, the hero signal was generally making lower highs, while the SPX was chopping around in that range from 448, SPY 448 up above. Let's see. Go back to Bookmap. So SPY trading in a range again between SPY 448 and just below the 44.99 SPX 44.99 combo 1 level. While options traders were taking negative delta positions, and then let me clean this up, we'll zoom in a bit. Then finally the S&P 500 made a final test of that 448 level and moved higher as options traders started taking positive delta positions, with a move up to the 4500 level. So that was a long setup. It took a while to set up, a lot of chop in the morning, which really worked. Range day fade trades worked in the morning, and then finally this final test of the VWAP and 448 level, and the price moved up to the 4500 SPX 4500 level. And so we know that options traders started taking positive delta positions around this time. And let's take a look at another clue. All right, sorry, we will take a look at UNH. It may not, I don't have coin or UNH in Bookmap. We can take a look at Hero. I know Coinbase is in there. I don't know if UNH is or not. I kind of doubt it, but we'll look for it in just a few minutes. So here is the long setup. Just point out clues here in Bookmap. Iceberg orders buying, that's shown by the rising light blue line. Large traders buying with iceberg orders. Set up that long there. All right, let's go back to Hero now. Scroll over a bit, and then there was a nice short divergent setup here. Note Hero starts dropping and price chops around and finally moves lower for a short scalp just around 1250. So let's go take a look at that in Bookmap. We're just looking after 1250. At this short scalp, it looks like there was a stop run, kind of a sweep up to around the 45.36 level, just below the SPY 449. And you can see the shift in order flow shown by the cumulative volume delta here, that dark blue line falling, as well as aggressive sellers coming in. So a short scalp. And remember, in a positive gamma environment, we're not looking for a lot of range today. Okay, so let's go back to back to Hero now. All right, so Richie38 asks, what are your time settings on the Spotgamma chart? So let's take a look at that. And I generally use the default, especially for trading in the morning. I just keep it on all trades in 1 day, the 1 day rolling window period. So this is showing a cumulative value for the entire day, which is negative so far. So net for the day, options traders are taking negative delta positions. And let's just see what they are doing. Separate out puts and calls. So they're buying calls, that's shown by the rising orange line and the positive number there. And then they're also buying puts, that's shown by the falling blue line and the negative number there. And so far the put buyers are slightly more aggressive, but it looks like, of course, the call buyers are winning. All right, so let's go back to the total. Oops. Try that again. All right, so Richie asked, what are the benefits of changing the time frames? So I like to change the time frame, or consider changing the time frame sometime in the afternoon. Let me take a look. So Uncle asked in Discord, to use this part of the dashboard in your experience. Are these, he's looking at the hero signals, so we'll take a look at that in just a minute. Are these good for same day setups or next day setups? And I'm looking at, first of all, I'm looking at intraday trading only, and and he's looking at, again, at the hero signal. And if you're looking for a bullish or a bearish setup, you can rank your watch list by the hero signal from weakest to strongest, let's say for a bearish setup, or from strongest to weakest for a bullish setup. We'll take a look at that in just a minute. So getting back to the time frames, in the afternoon, especially if, let me see if I can find a better example of this. So here's a good example right here. Here's Nasdaq. Here's the hero signal for Nasdaq. So notice how it is pretty flat here, not giving a lot of information. Again, this is cumulative for the day. The 1 day rolling window period is accumulating all of the notional value for the entire day. So let's change this. Now what Brent has talked about, Brent Kachuba, the founder of Spotgamma, is he just scrolls in. I think he used to change the time frame, but now he just scrolls in like this. I'm just rolling my mouse wheel to get a more clear view of current hero signal and price action. And so you can see there's a pretty strong correlation between hedging flow and price action. And this is just scrolling in, but still keeping the 1 day time frame. Now, if you want to get a more up-to-date or more clear view, you can change this rolling window period. So now I'm only looking at the last 30 minutes of data. And this is showing a little bit different picture of a hero signal making lower highs. So to me, this is a little bit more clear. So in the morning, I'm always looking at the entire 1 day look back period. In the afternoon, especially when I see a hero flatline, you can zoom in or you can change your rolling window period here. So let's go back to 1 day. All right, so let's take a look at the Nasdaq setup. And the main setup that I want to talk about is right here at around 10:30. I guess the so Richie asked, so if we were to interpret it, we could possibly expect price to drop based on the 30-minute time frame. Yeah, so I would, when I see something like that, a divergence, then the next thing I do is look at Bookmap, watching order flow for clues of a reversal. I'm looking for a level where price might reverse. Let's say where market makers need to change their hedging, or options, or other traders may want to short, and then watching again for clues in order flow on Bookmap. All right, so there's the 10:30 reversal. That is a typical time for a reversal, a high or a low of the day around 10:30. So let's go take a look at Bookmap. Go to Nasdaq, and there's the reversal higher at 10:30. You can see the shift in order flow, aggressive sellers moving price down just to the VWAP, upper daily expected move, and then aggressive buyers start to come in. Aggressive sellers shown by the pink volume dots, aggressive buyers shown by the green volume dots. Price pulls back, additional giving you additional entry points, and note the rising yellow line that's showing buy stop orders helping to fuel the move higher, as well as rising cumulative volume delta. And Richie, so far I don't see any signs of a reversal here. This looks very bullish. The move higher continues to be fueled by buy stop orders. So for Nasdaq, it trades in a pretty wide range. If I were looking for a short setup, I would look for a lower high before I took a short. So far, it's just making higher lows, not lower highs. So options trades and market maker hedging flow often, but not always, are key drivers of price action. So that's why I'm looking at Hero and Spotgamma Hero. And remember, the thesis for the day was bullish, although QQQ is trading well above its call wall. All right, let's take a look at, Uncle wanted to take a look at the Hero signal. So I'm going to go back to Hero. So far for today for Nasdaq, and this is one reason I think it may be best to look at this longer picture, the 1 day look back period, showing the general trend. Leveled off a bit, but now is moving higher. All right, let's take a look at the Hero signals. So what Uncle is asking about is this Hero signal right here, and you can rank or sort your watch list or the entire list of symbols that support Hero by this Hero signal. And this is not in this case not necessarily giving good information. Let's scroll down, or let's sort it. So SPX, a pretty weak signal. So what this means is this Hero signal for today is lower, in the lower portion of where it has been in the last 30 days. That's shown by the entire range of the slider here, as well as the range for the last 5 days. shown by the colored portion. Maybe it's easier to see for Amazon here, showing the signal for today, shown by the dot, is in the high end of the range that it's been for the last 5 days, but still in the lower end of the range for the last 30 days, shown by the entire slider. So let's rank. So here's a good example, and this is a stock that I wanted to show, Google. So Google, the signal, and this would have been a very good thing to look at, and it, I'm looking at this hero signal for right now. It and I used to post this watch list in Discord, ranked by hero signal, around 10 a.m. in Discord. I've stopped doing that. If people want to see that, I can start doing that again. So here's a good example right here. Hero signal for Google is stronger than it has been in the last 5 days, shown by the colored portion, and then also stronger than it has been in the last 30 days, shown by the entire length of the slider. So let's take a look at and see what traders are doing. So they're buying calls. That's shown by the rising orange line. Notional value 174 million positive, and puts, they're actually selling puts, but that is insignificant at positive 1.25 million. All right, so let's go take a look at Bookmap for Google. All right, so Uncle, if you had sorted your hero list this morning, and I don't know what that hero signal looked like for Google or early in the morning. I suspect it was on the high end of the range. That would have been a good clue to look for a long in Google here. So there's the setup in Bookmap, very bullish. Aggressive buyers coming in at the open and continue to move Google higher as traders were buying calls. All right, let me take a look at some other stocks. So there was a request for UNH. We'll take a look at that. And I don't know if it's in there. And by the way, for Google, that price target, let's just take a look at that again. The very obvious price target was the liquidity at 125. And note there was some liquidity in the order book at 125 before the cash open, and the cash open at 9:30. A lot of sell orders come in, and those large sell orders tend to attract price. So great price target there for Google at 125 as traders are buying calls and moving price up to that level. All right, let's take a look. We're going to look for UNH, then Coin, then Sampan wants to look at NVIDIA. All right, so let me get to go back to Hero now. We'll do a search for UNH. Oh, it is in here. All right, so for UNH, traders are selling calls and buying puts. Not a lot of notional value here, but net they are taking negative delta positions. So I, without looking at UNH and Bookmap, I can't make any assessment further than that, other than traders are taking negative delta positions. So sorry, that appears to be how they're positioning for earnings, if earnings are today. Let's just see, we can take a look at one other thing. and we'll see. So this green line is showing the next expiry. So that is for stock. That's going to be tomorrow expiration, Friday. So about a third of this is options that expire tomorrow. And then the remaining portion is all expirations. That's not known here, just we know that about a third of this is in options that expire tomorrow. So traders making their bets. Whoops. All right, let's take a look at Coinbase. All right, so apparently there was, so Slotazari says Coin had good news today, doing well. So it appears that that news came out about 11:30. And at that time, traders started buying calls. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure, and that can tend to drive a price higher, drive a stock higher. All right, so that's Coinbase. And then let me take a look at Sampan's question. All right, so let's go to NVIDIA. So when Sampan asked, can we look at NVIDIA put call from Hero? Looks like traders are buying calls and selling puts. Call wall also breached. So let's zoom in. So here's the call wall at 450. So that's right where this light blue line, that may be difficult to see, that light blue line right there. So the call wall was breached just before 1:30. And that's as traders, let's zoom in on this. So really there was not much going on with Hero. Traders taking negative delta positions in the morning. That activity pretty much leveled off, and it looks like price started rising, and then options traders came in a few minutes later. So let's see what. So traders started buying calls, and separating this out, we can see that call buyers were pretty much in sync with price action, shown by the slightly rising orange line. Then they get more aggressive, and price starts to move up more aggressively, more sharply, and then they also started selling puts. Right now, both these numbers are positive, so they're buying calls and selling puts. All right, let's go take a look at Bookmap. Take a look at NVIDIA. And there was a gradual increase from around 12 o'clock on, and then a sharp move higher just after 1 o'clock. Let's go take a look at Bookmap, take a look at NVIDIA. Let me adjust this a little bit. So there's the move in the morning. This order flow looks bullish to me. Notice all the green dots there, aggressive buyers in there. Price chops around and then starts to break out about 12:30, 1 o'clock. Price is just below the 450 call wall. And regarding the question about Nasdaq earlier, with Nvidia rising like this, so here's the breach of the call wall, right just before 1:30, right before I started, and the stocks may treat call wall breaches a little bit different than indexes. So if there's a breach of the call wall, all the calls at that strike, that the highest number of calls, those go in the money, and as price continues to increase, traders continue to buy calls. The delta of those calls are increasing. So traders are buying calls, market makers are short calls, so they're short the calls that traders are buying now. Also, those calls at that 450 level, their delta is increasing, so they have to continue to buy futures to hedge their delta exposure. All right, so Sampan, I hope that answers your question. And I would, again, with a call wall breach, you can look at that as potential acceleration point. So if it doesn't act as resistance, price could accelerate higher after that call wall breach as the calls at that level go in the money, and market makers have to continue to hedge their delta exposure. Again, remember, there are short calls. Those calls go in the money. All right, and then Sampan ask about the green and red numbers. All right, so what this is the absorption and sweeps indicator. So the colors that I use for sweeps, I use bright red. So this is showing a sell sweep and also buy sweep. So there was a lot of, and you can just tell by the large volume dot there was a lot of trading at that level, a couple of buy sweeps. That's really what I would focus on here. That's shown by the bright green numbers, these small bright green dots. Buy sweeps up into that level. So that's the sweeps indicator. And then these purple numbers are showing passive sellers. So the buy sweeps, those were absorbed by the limit orders, the sell limit orders in the order book at the time. So that's the colors that I use. Bright red, bright green to show sell sweeps and buy sweeps. And then I use purple and blue for the passive. That's the absorption indicators. Let's see if I can go back and see. So here's this light blue number there, also that light blue square showing buy absorption. Buyers are absorbing the sell sweep, shown with the bright red numbers there. So that is the absorption and sweeps indicators. I believe they're included with Global Plus. All right, my time is just about up. Let's take one last look at the indices. We'll start with the S&P 500. Continues to grind higher in a positive gamma environment. Buy stops shown by the rising yellow line, helping to fuel the move higher. We'll take a look at Nasdaq, and then we will take a look at Hero for both. for Nasdaq continues to move higher. Again, fueled by buy stop orders, shown by the rising yellow line. Let's see what options traders are doing, and then we'll call it a day. So NVIDIA, it looks like the call buyers have stopped now. So they stopped buying calls, at least for the moment, and they've stopped selling puts, and prices leveling off. So that would be a good correlation to look at for Nasdaq. Also Nasdaq now, traders are starting to take negative delta positions. And back to Richie's question, we are looking at, just to confirm, the 1 day rolling window period, and I'm just scrolling in to get a better an up close view and see that traders are starting to take negative delta positions. And then finally, let's take a look at the S&P 500. And the same, traders starting to take negative delta positions, and that could just be a swing lower. All right, so Floyd's Garage says that was good info on going above the call wall. Thanks, you're welcome. And Sampan also says thanks for the explanation. You're welcome as well. All right, that's all I have for today. We'll take one last look at Bookmap, and then we will wrap it up for the day. I want to thank everyone for watching. Thank you very much for your questions and comments. I hope I was able to answer everything. If you have additional questions, please feel free to post them in Discord, in the Options-Doug chat channel in Discord. All right, I will see you tomorrow. Remember, consumer sentiment out at 10 a.m., and we will wrap it up for the week tomorrow. Thanks again, everyone. Thanks for watching, and I will see you tomorrow.